All right, everybody, Stocks by the Numbers, welcome back. And another quick update here on one of our favorite stocks on the channel, Rolls Royce Holdings, ticker symbol RYCEY, listed here on our domestic OTC markets here in the States. Of course, RR on the LSE, overseas, London Stock Exchange. This stock, again, originally brought to you on this channel right after the ball dropped in 2023. Stock was $1.20 a share, consistently hitting new highs, consistently beating earnings expectations for the last 4 semi-annual reports, aka 2 straight years of coming in above expectations and outperforming what analysts and everyone on the street thought they were able to do. But of course, I brought it to your attention back here. So, gotta brag a little bit when we get them right. But earnings came out couple of weeks ago here, beginning of August, and as you see, the company posted EPS 11.4 cents, estimate 7.5 cents, beating by over 50%. Revenue came in strong again, 10.467 billion on estimates of 10.139 billion, beating by about 3.25%. And again, you can see that is now the fourth semi-annual in a row since we started looking at it. Nothing but up and up. Pointed out all of these key levels where the stock obviously got up to and continued to break up above, and you can see next key level 690 on my screen. That's the level I'm looking for. But we had a lot of news come out on Rolls-Royce just over the last even couple of weeks, really, since these earnings numbers hit. But more importantly, what did I say? What did I tell you? Right? I said that all the way back here at $1 and change. I said everyone forgot about it. They take it out of the spotlight. They take it off of everyone's radar. They want you to forget about it. They want you to dismiss it. And then, again, it's a brand name company, a well-known institution overseas there in the UK. And in my opinion, they weren't going to let anything happen to it. And I predicted back then that the contracts were slowly going to start trickling in, and everything was going to be fine. And Rolls-Royce was more than likely going to get back on track. And of course, we were looking at how they really had a fall from grace. And you can see how the stock was up here in the high teens. It was up here 20 plus, and it just completely tanked down, went down to sub $1. We start missing on EPS. We start missing on revenue. We have to cut our dividend to right all the wrongs. We have to go through a transformation phase for 1, 2, 3 years or whatever it was. And everyone wanted to write off this company. And that is usually more times than not when you have to start being aggressive and you have to start looking at the longer, bigger picture. And that's why now we're turning around, and what we're talking about a year and a half ago when we first looked at the stock, and it's up several hundred percentage points. So of course your gains are huge. Your capital gains taxes are cut in half if you decided to take profits sometime recently. But also, more importantly, I speculated that the dividend would more than likely be reinstated down the road once they got all their ducks in a row, and that is potentially what we're hearing about as well. So, quick update here. All of a sudden, we have positive headlines on these articles coming out, right? Is Rolls-Royce stock outpacing its aerospace peers this year? All of a sudden, it's the best one in the space, right? Are you looking for a top momentum pick? Why not Rolls-Royce? Why Rolls-Royce is a great choice. All of a sudden, it's a top momentum pick, right? This is why, again, some people, it may be a simplified way of how I look at some of these stocks and just the way I personally do it. And some people may feel that sometimes we look at too much, right? And we make a video for 30, 40 minutes and people say, you could have summed that up in like 12 minutes, right? What are you doing? Other people may comment and say, well, you didn't, really rip apart the 10Qs and the 10Ks, and you didn't really dive into, the interest on the debt. And, and again, I can completely appreciate that fact. But again, even just taking a step back, there used to be the saying, KISS, K-I-S-S, keep it simple, stupid. And that's kind of what can help you in this market, especially over the longer term. And I showcase that time and time again on this channel. And it's across really all sectors if you look at it. The overreaction dips in a stock like Verizon, bringing it down to multi-year lows down into the 30s, right? I said, in my opinion, that's an overreaction. It's probably going to come back up. Stock's been sitting above 40 for quite some time now. Now, again, I know I initially looked at it. It was one of the first stocks I looked on the channel like 2.5 years ago, back when it was above 50. And that was obviously before they started basically tanking the entire telecom sector. But more importantly, again, when we look at stocks like Hershey, again, $200+ stock, they beat it up. All of a sudden, it's 178, 182. That's when you step in, you buy the dip, and you just buckle up and you take a ride. And something like Rolls Royce was exactly up that alley. So it really doesn't matter how you look at it. Again, after the lockdowns in 2020, I started looking at the metal companies and the material stocks like LPX, stocks like SCCO with the copper, right? Because it was inevitable that if we're just consistently printing this money, then the copper is going to go up. You're going to see the rise in silver, you're going to see the rise in gold. This is what I mean. If you can see the writing on the wall and not be too tempted to try to time it for this week or the next couple of weeks to try to see what's going on, if you're able to tuck away for the longer term, in my opinion, it's much easier to make good returns in this market over the years. But Rolls Royce, again, I mean, I know I'm bragging a little bit, but great call here, and basically up that, down that same road, if you will. Brand name company got completely beaten up, and this is what I said. I said they're going to take it out of the spotlight. They don't want you to pay attention to it. And then when no one's looking, it's going to run up to 2, 3, 4. Then they're going to upgrade it all to 5, 6. Then all of a sudden, everyone's going to tout it as a great pick. Should you get in now, right? I literally said that. After it starts running and it's up several 100%, they're going to put out articles asking people, oh, should you get in now? Is it worth buying now? And this is why, again, now this new volume from unsophisticated investors is probably going to fuel even higher highs. However, the stock has been doing very well in the numbers. So even if you were, even if you did find this one late, in my opinion, there's still some upside here, even from this level. Again, 690 in my opinion, next level, 690. So yeah, apparently Rolls Royce is a great choice. Moodys Upgrades Rolls Royce ratings with positive outlook. Baa3 up to Ba1 maintain positive outlook. Positive outlook based on Moody's projection of consistent improvement in Rolls Royce's credit metrics and better track record in the next 12 to 18 months, right? So sustaining and potentially going to get better over the next 12 to 18 months. Rolls Royce to develop mission bay handling system for UK Royal Navy frigates. Yeah, no shit, we knew this. Who else is going to do it? That's why I said down at $1. I said, trust me when I tell you, this baby's on sale. You start accumulating shares, you tuck it away for the long term, you'll be more than fine. And again, you are up several 100 percentage points if you caught the videos when I first looked at it on the channel, and you are potentially paying half the amount in capital gains tax if you sell now or sold recently, with a potential dividend upcoming. Alpha Value Banner Europe downgrades Rolls Royce to sell, lowers price target. To sell from reduce and decrease the price target to £418 sterling from 420. Okay. There always tries to be that standalone analyst. I give him credit though. Look, we're outperforming our peers. And look at this now. Looking to buy 30 Airbus A330-900 aircraft, option to buy 30 more. But of course, oh, little whistle there. But of course, RR, which manufactures the only engine used on the A330neo, said it was an order for 60 of its Trent 7000 engines for the 30 jets. Because again, who else are they going to call? This is why I said, let everyone be worried. Let everyone watch it down at $1. Oh my goodness, Rolls Royce, that name, that company is down at $1 a share. Let them forget about it. That's when I personally like it. That's when I would have stepped in. For the record, I do not have a position in Rolls Royce. More contracts? Combination of business with Airbus, Spirit, Rolls Royce. Always, 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 always. Because they have to go to them. Now we get back to around August 1st, which is where these earnings came out. Again, another beat on EPS and revenue. Okay, bear with me. Latest beat and raise boosts Rolls Royce, one of Europe's hottest stocks. The Lone Ranger, forgotten about. Sub-dollar, low dollars. No one talked about it. No one could touch it. Is now Europe's hottest stocks. I'm sorry, one of them. Engine maker's latest beat and raise buoyed one of Europe's hottest stocks. Rolls-Royce gained 9%. Rolls-Royce said on an underlying basis, its pre-tax profit in the first half nearly doubled to over £1 billion British pounds as revenue rose 18% to £8.18 billion. Analysts had expected underlying pre-tax profit of $744 million on revenue of $7.74 billion. Way off. It also reintroduced shareholder distributions, saying it will pay 30% of underlying after-tax profits to shareholders this year, with an ongoing payout ratio of 30 to 40% each year. Its civil aerospace unit saw underlying operating profit growth of 85% on revenue growth of 27%. Defense units saw underlying operating profit growth of 34% on 18% revenue growth. And its power systems division saw underlying operating profit growth of 56% on 6% revenue growth. The maker of this Trent engine said it benefited from higher large engine aftermarket profits, as its defense unit benefited from transport and combat aftermarket profit growth. It now expects underlying operating profit between £2.1 billion and £2.3 billion, up from 1.7 to 2. So now our low end of the range is 5% higher than our high end of the range, which of course is now 15% higher than our high end of the range. Free cash flow between 2.1 and 2.2 pounds, up from 1.8 to 1.9. So this company has now seriously begun to snowball some of these numbers and is coming in above a lot of these expectations across the board. So we have to give credit where credit's due. Raises goal, restarts dividend. Oh, you love to see it. Raised full year guidance would reinstate dividends after earnings increased, taking shares to record high. Cost cuts, strong period for its civilian aircraft division drove the results. Absolutely outstanding. Rolls Royce currently leading the FTSE. Cost savings initiative, right? This is what I mean. We have to cut our dividends. We have to do some belt tightening. We have to trim the fat. It might take a year and a half, 2 years. And then when we bottom out and no one's looking, that's when everything's going to rebound. And then, when we get heavily back in the black, we're going to restate our dividend and we're going to become a brand name on the exchange again. It literally happened in front of your eyes on this channel. And again, I have to give myself credit. $1.20. Was it the low of the low? No, of course not. We looked at the chart. We saw it go down to 78 cents or wherever the heck it went, right? So even if you started buying at $1 and change, you still technically would have went down. But this is why, what do I say in my opinion? Situations like this, you don't worry about buying at the low of the low and, oh, you missed it, or, oh, you knew you should have waited a couple of days. This is why I say, if you're in the correct position with your liquidity, in my opinion, you should be piecing your way in, just accumulating shares, building a position, trying to average down, get as much as you can, because now your shares are significantly more valuable. And I'm not just talking about the capital appreciation either. Underlying operating profit, key metric, 1.15, up from 673 million. Phenomenal. Revenue again up above 8 billion pounds from sub 7 a year prior. Raised full year, yep, we looked at that. Raised free cash flow, yep. Reinstate shareholder rewards 2024, 30% payout after tax profit, followed by a continuing payout ratio of 30-40% each year. Launched a restructuring program late last year after reporting a pre-tax loss in the first half of 2024. quote, strong progress in the early years of our plan demonstrates a front-end loaded delivery of performance improvements. The engineering company, which also makes engines for ships, trumped expectations that were already high, Jefferies analyst said. Yep, free cash flow finish. Yep, beautiful. So it really seems like nothing but positivity for Rolls-Royce at the moment. And of course, people asked, hold on. I just want to make sure here I'm not leaving anything out. Because we looked at this the end of July. Actually, no, maybe it was right there. Maybe it was the end of June. So I'm just double checking here. Bear with me. Small modular reactor design moved a step closer to fruition on Tuesday as the UK nuclear regulator said it had completed the second stage of its assessment of the technology. See, we have small reactors now on the move. This is what I said. You know, a company like this, you can't count them out. You can't count them out because it's just too big of a name in the space. It's just too big of a name in the space to let go. So that's why, again, if there was a problem on their end, you know, they got a little overextended, losses started to get out of whack, and, you know, all of a sudden, yeah, boom, oh, our cash flow was negative, or oh, we're bringing in a little less revenue than everyone thought. Yeah, now all of a sudden the stock starts getting beaten up, and now you have to take action. And that's what they did. And for engine maintenance rockets, Pratt Whitney, right there, RTX. Demand is high. All shops in the world have been full. Oh, okay. I thought they were mentioned for another reason, but that's okay. Airbus in talks with Rolls Royce on narrow body engine, using the engine maker's new turbine to power its future lineup of narrow body aircraft in what would be a major breakthrough for the British engineering company. To offer Rolls-Royce's latest engine technology on the successor to its best-selling A320neo family of aircraft. Okay, A320 model, direct competitor to Boeing's 737 MAX. Set to enter the market, next generation of aircraft set to enter the market in the later part of the 2030s. Okay, so you still have some time. Would mark a major win for Rolls-Royce, of course, which for years has talked about its ambitions to expand beyond its existing lineup of civil aircraft engines that exclusively power larger wide-body jets. Narrow-body aircraft represent a far bigger portion of the global market for civil aircraft by volume. Right? So now if we're talking about rolling out to, you know, more commercial aircraft, you know, they call it civil aircraft, but obviously that could potentially be another big win. That's obviously basically why they're basically saying that it's going to be another major win, right? Basically. Oh, it's just too good. It's just too good. And on and on and on and on. Yep, narrow body. We're moving. Right, there was that issue with Spirit, which of course makes Rolls-Royce look a little bit better. Airbus cut delivery forecast, right? Yep, this went down a little bit. Cut the guidance. And yeah, it was June 20th, so we're basically back to where we were. Yes, and this was June 12th. Yeah, this was one of the last articles we looked at. So, again, I know that was, you know, a little time consuming, but I just wanted to go back and look at some of the major headlines that came in for Rolls-Royce. And, again, just to show you that, you know, this is, in my opinion, almost like the perfect situation to look for. Because I was personally very confident that this company wasn't going to go anywhere. And like I said, the revenue was going to start coming back in. The contracts were going to flow in. They were probably going to right the ship, right the wrongs, and get back on track. And everything was going to be fine. And down the road, a year or two, however long it took, roughly a year and a half. But I speculated that, in my opinion, if everything gets back on track and everything goes according to plan, they will eventually reinstate the dividend, which will drive the stock up even further, which will bring more volume in, which will show more stability in the company, which will fuel probably further growth, and more future upgrades and price target lifts are going to come in, and more institutions are going to start taking positions now, because now it's back on track and it's a dividend paying stock again. You understand what I'm saying? So now all of a sudden the floodgates are potentially about to open. But in my opinion, 690 next stop. And of course, someone asked in the Discord, oh, if they pay a dividend, isn't that going to start dropping down the price of the stock? And the answer is probably. But we see that time and time again, even with a lot of blue chip names, right? You look at something like a Coca-Cola, and, as we approach that dividend payment date, the stock may dip for a couple of days because everyone knows they're about to pay out, whatever, millions of dollars. And then after that date passes, the stock will bottom out, and more times than not, usually have a bounce and kind of start slowly edging back up to where it was. So usually the dividend payments, yes, technically it's viewed as cash outflow, so the stock could go down in value in the immediate short term. But in my opinion, again, based on everything we've been seeing, hitting the tape here with Rolls Royce, I wouldn't I wouldn't personally, get nervous or look to sell as we go into a dividend if the stock, starts dipping down from 650 to 610 or something like that. In my opinion, I wouldn't do that as an issue. But again, I know that everyone is different. But let's switch over to stock charts real quick and I'll let you go, because we can see that our RSI here on the daily, about 66.5, we actually could take another pop higher, and we did hit these new highs of 660, and then you can see a little dip down, and now we're slowly inching back up. So this is why I feel that a lot of people may not be talking about it even yet, even after this big run up, but I have a feeling that a lot more eyes are now on Rolls Royce, and I think a lot of people are stepping in, week by week, month by month even, and they're just adding to the position and starting to trickle funds into Rolls Royce. And we can see the top Bollinger Band on the daily, 678, that trend line 690, and the stock has been well above the 50-day moving average for the most part here for basically the whole year. And now, because we slowly had this climb for the last 18 months, this is what I mentioned also in previous videos, that now your moving averages slowly build up with the stock and they potentially make new support levels. So if we have, a big flash drop here, you can see 597 and a potential bounce off the 50-day. But let's say everything really takes a haircut, 10, 15%, all the major indices. You can see a pullback here to 489, which after being at almost 7 might shake a lot of people out. However, because of the steady revenue coming in above estimates, raising guidance on revenue, profits, and operating margin, free cash flow, everything, and of course getting upgraded, and of course now reinstating the dividend, something like Rolls-Royce could potentially chunk down to this 200-day moving average and then have a steady bounce and start to climb and rebound better than a lot of other stocks that we've looked at. Because in my opinion, they are much more financially healthy than they were a year or two ago. And of course, you had that Moodys rating upgrade as well, which in my eyes is huge. But here we can see the MACD also potentially flattening, but in my opinion, it really should kind of meet up and then bounce back up and continue upward. It really shouldn't dip down. However, the RSI is potentially approaching overextended on the daily, so anything can happen. Might see a pullback 628 here, mid-Bollinger Band. Only time will tell. Check the pivot points let's go to weekly. Look at the RSI on the weekly time frame for Rolls-Royce. Absolutely phenomenal. And we can see that we've just been riding along the top Bollinger Band here for the last 3 or 4 weeks, and our top band still sitting at 662. Stock hit a high of 660. RSI on the weekly almost 81.5. So in my opinion, we might kind of double top at that high 660 that we just hit, or potentially break up and top that top Bollinger Band at 662, and then we can potentially reject, because realistically the RSI is overextended on the weekly. But on the daily, again, we still have a couple of points before we hit that 70 benchmark. So we can rise it up a handful more cents potentially, hit another new high, and then even though this is well over 70, once the shorter term daily RSI hits 70, that's when you may see a potential pullback, and you might see that mid-Bollinger Band level, 628. You might see the mid-Bollinger Band level here again on the weekly, 575, right? Because we can see, look, this right here is like where we looked at the stock, and you can see it popped up above the 50-day moving average. It was below it for over a year, popped up above the 50-day moving average, and has not even touched it since. And the whole time, look at this, a couple of bounces and tests on the mid-Bollinger Band, but this whole time, we're talking 20 straight months, this stock has been above the mid-Bollinger Band. And that was something I was able to say in the last 3 or 4 updates going back the last 20 months, and I'm still able to say it today. Absolutely blows my mind. You want to talk about a strong, stable, steady grower? I really don't see anything better than this, except maybe PM right now, Philip Morris, on an absolute tear. I don't know if you guys been seeing that. But we also had MACD cross back to the upside here, potential bullish cross, which could have, again, kind of fueled off of the mid-Bollinger Band bounce with the MACD cross. That could have also helped pump it up and keep the RSI up and have the stock consistently still hitting new highs. But even on the weekly, again, you can see the 50-day moving average completely swung from about 110. Now it's above 4.5, right? So we were looking on the daily. What was that drop again? 489, potentially, that moving average. And then that's why something on the weekly here, you can see the 50-day 454. And again, the bottom Bollinger Band, 487. So now you have a lot of potential action at that 487, 489 mark. You have the 50-day moving average at 454, which is why I'm saying, yes, technically it'll be a 30+% drop if it just takes a 2-point haircut from 6.5 to 4.5. But in reality, it would not only actually be kind of healthy, but in my eyes, it would probably hang out and bounce around in this range, and it would flatten out. It probably more than likely wouldn't tank down back to the 2s unless the markets really begin to sell off. So that's why, yeah, it is possible. But in my opinion, I would more than likely, pending on overall market environment, I personally, in my opinion, would more than likely build a position here and then wait for the run back up to potentially 7+, right? But again, we have to take it day by day, week by week. So we'll see what happens. Pivot points real quick, I'll let you go. Probably already spoke for 40 minutes or whatever. I don't know. It feels like a lifetime sometimes. But I like to cover all the bases. It is what it is. We can see the top pivot point here on the weekly is 580. So we're well above that right now. And if we switch over to the daily, top pivot point 627, we are well above that right now. But interestingly enough, 627, top resistance, mid-Bollinger Band 628. Right? So this is why I'm saying the weekly RSI overextended, RSI on the daily potentially approaching the overextended benchmark. So we might pop up a little bit and then pause back down. 627, 628 looks like a key level. Could potentially bounce off that pivot point, bounce off that mid-Bollinger Band, and then slowly climb back up after RSI adjusts, right? But we'll take it day by day. But the fact that the company just keeps growing, the stock keeps hitting highs, and again, in my eyes, next stop, 690 on my screen. And also, on top of all of that good news, the company now reinstating the dividend as projected on this channel over 18 months ago back here, January 10th, 2023. But that's pretty much it, and I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up, algorithm, helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. Have a good day.